Okay, just a quick sound check. Thanks for joining in. First day of September, and surprisingly hectic week in terms of trading, and guessing this is going to continue today. Okay, audio seems to be good on my side. Let's get started. This is news trading session number 1. As per usual, this is going to be Nonfarm Payroll, and just for your information, our next schedule is actually going to be on the 11th. The inflation number is actually going to be released on the 13th of September. So that's actually going to be a week's break in terms of the CPI numbers. Okay, my name is Vito in general. Let's get this started. Let me know if there's any audio issues, but we'll roll through. And as per usual, we're going to be doing a live NFP trade. But before that, we're going to go through some of the fundamentals on what we're looking for tonight. Okay. Alright, so my name is Vito Angelo. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reactions to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So just keep that in mind when we're trading news, okay? I think this is great. This is actually being put into the disclaimer. So be attentive when determining the volume of your transactions and consider all possible risk factors. Just make sure that you're doing the right lot size. Don't, if you're thinking of doing 0.1 but you accidentally set it to 1, obviously that's going to create a lot of problems as well. All right. So that's just a quick disclaimer, and then obviously there's going to be bonuses. There's going to be a promo code that I'm going to show you later on, and obviously access to a private Telegram channel if you have registered through emails. Okay. Just a little bit about me, just to wrap it up. Basically, I started trading before 2004, obviously, but full-time trading since 2004. Basically, work in the industry as well as a chief technical analyst for GFT, which is currently integrated into forex.com or Gain Capital, right? And Invest Financial Services, which is a listed forex broker in Japan. So other than that, obviously, I've been quoted, in press and stuff like that. Contributed to Channel News Asia, CNBC, Bloomberg as well as BBC, and obviously done a lot of webinars, shows, and during investment expos and whatnot as a panelist, as a guest speaker, as well as a keynote speaker. Okay, so you can read through that if you want to, but I'm just going to skip through this very quickly because I want to focus on what we're going to be looking at tonight. All right, so we want to talk a little bit about the BLS, or the Bureau of Labor Statistics in the US. What is the US non-farm payroll that we are looking at? Obviously, you can look at other central banks, other economies as well in terms of their non-farm payrolls as well as their unemployment rates, if you want to look at that as well. But we want to focus on the US side, which is going to be the biggest scheduled event pretty much per month, every first Friday of the month. That's what we're going to get. Okay. So this is the promo code. I know, I apologize. Some of the wordings are actually in Bahasa Indonesia, but the code still works. It's Nonfarm 2023. So feel free to use this code to double your deposit bonus if you're thinking of depositing. But yeah, it's Nonfarm 2023. Feel free to use that code if you want to. All right. So what is the Bureau of Labor Statistics? The BLS, or the Bureau of Labor Statistics, is a federal agency that collects and disseminates various data about the U.S. economy and the labor market. It also includes Consumer Price Index as well as the PPI Index, Producer Price Index, both of which are considered to be important measures of inflation, which is going to get released on the 13th this month. It's usually just the week after the NFP, but this month there's going to be a skip for a week. Okay. In the labor market data, the most interesting are the number of people employed outside of agriculture, which is what we call the non-farm, as well as the unemployment rate. And this is something we want to focus on tonight as well. So at the very beginning of the year, the agency publishes a calendar with release date for the entire year. So this is all scheduled. So every year, it's already pre-scheduled when they're going to release the data and stuff like that. So you can actually go to their website if you want to and check it out at the beginning of every year and mark it on your calendar if you want to. But look, we're going to be doing live NFP every month anyway, so we're going to be keeping you updated. All right. Unemployment data is also published every first Friday of the month. If it's a holiday, obviously publication is more often postponed to the next week and less often to Thursday of that week. Inflation data, CPI, PPI is published the next Wednesday after the labor market data, but for this one, it's actually going to be not next Wednesday, but it's on the 13th. So yeah, just keep that in mind. There are changes to the monthly release number. It's not always every week, so just bear that in mind. But yeah, look, these numbers that we're going to be looking at tonight, although everyone just keeps saying it's NFP, and Nonfarm Payroll, that's not the main focus, because during the NFP numbers, we're going to be looking at other numbers as well, like the unemployment numbers as well as the average hourly earnings. Okay, so let's take a look at the non-farm payroll first. These are jobs added or lost. So the NFP report is a monthly release by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, and non-profit organizations. So market analysts and investors usually look for NFP figures above 200,000, as it is seen as a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context in which it is released. I'll explain a little bit about this now, so I don't have to explain it later on. But last month's number was a little bit unique, right? So we have the NFP number that's actually below the consensus. It's below 200,000. But we get a revision from the previous month as well. So the July numbers, we're going to be looking at the August number today, right? But the July number was revised down, and the June number was revised down. The July number was actually up, right? So it was a very unique situation last month where we got a huge whipsaw in the market, because I think there's a little bit of a confusion in terms of whether or not the NFP number is actually good or bad. It's technically good. I mean, I can show you the results later on, but it is technically good in terms of the NFP numbers, even though it's below 200,000. It is below the consensus, but the previous number before last month was revised down. That was actually lower than the actual release. All right, so we need a little bit of a context in terms of what we're looking at in terms of the NFP numbers. So we can't just say, oh yeah, NFP it's down, it's up. It doesn't work that way. Okay, it's a little bit unique, as you know, and as we progress every month, and we've been doing this since May. And you know, as we progress, you guys can probably know, if you guys been following every month, there are different contexts in terms of how the NFP number impacts the market. So it's not always 100% guarantee that, oh yeah, if the NFP number is below consensus, that's going to be good, that's going to be bad. It doesn't work that way. Okay. So the NFP data is a crucial indicator of the state of the U.S. labor market and can significantly impact financial markets, right? A figure that falls below market expectation may be viewed negatively, while one that exceeds expectation may be viewed positively, just on the general note. As such, NFP figures are closely watched by traders and investors, particularly in the forex market, where currency pairs like the Euro USD, dollar yen, dollar Canadian, pound USD tend to exhibit high volatility in response to the release of the report. So we are looking at the US NFP numbers. So if anything that has to do with the US dollar directly will have a huge and significant impact. Crosses like the euro pound, the pound AUD, euro AUD, the yen crosses, the sterling yen, euro yen, typically don't have an immediate impact. They have a little bit of a secondary impact into the market. Okay. So the release date is a special time for many traders who have learned to successfully use special non-farm strategies. I'm going to share a few. It's not complex. It's super simple, right? So after the release, there are actually going to be strong chances, changes in quotations, and even trend reversals. Algos of technical analysis technically stop working as well, because we have a lot of whipsaws. So if you're looking for those patterns in the market, you don't do that during the NFP release, because it's going to create a lot of noise. So there's going to be a separate technique in terms of how we actually trade the NFP market. It's unlike a normal market condition where we kind of study the charts, we look for price patterns, reversals, and stuff like that. Typically with NFP release, it'll create so much volatility in the market. Just for the first, maybe for the first hour or two following the NFA release, market gets extra volatile. It moves a lot, right? And you could actually defy what your chart patterns is going to be looking at, because post release NFP, within the context of hours, it's going to create a lot of noise in the market. Okay. Now, according to the BLS, non-farm employee classifications account for approximately 80% of the U.S. business sectors, contributing to the gross domestic product, or the GDP. Obviously, if we have a huge drop in jobs being lost every month, does that have an impact onto the GDP? It might. Okay, it's not the whole picture, but it might, because it contributed to 80% of what the GDP is. Okay, now. Best assets for non-farm trading would be the Euro USD dollar, Japanese yen dollar, Swiss Aussie USD, New Zealand USD dollar, Canadian pound USD. These are currency pairs that show high volatility, as well as gold if you want to, because there's the US dollar in there. But if you're thinking of trading the Euro pound, pound AUD, Euro AUD, as I say, all the other crosses, they don't have an immediate impact. Now, would that benefit you? Depends, right? If you still want to trade and you want to step aside from all this volatility, all this noise, then yeah, maybe those those currency crosses would work for you. But if you want to trade the volatility, you want to pick a currency that has the US dollar in there, because it's going to be directly impacting it. Okay. All right, so the other data that we're going to be looking at is the US unemployment rate. I need to go quick because I only have about 7 minutes to go through all these theories. But yeah, let's go quickly. Unemployment rate is calculated in percentage and is published at the same time as the non-farm payroll. The unemployment rate is also the proportion of the labor force that is not currently employed but could be. The US unemployment rate is calculated based on a survey of approximately 60,000 households, right? So whole of the United States. The survey taken is only from 60,000 households, right? No, we're not talking about hundreds of thousands or millions. So according to the US Bureau of Labor Statistics, to be classified as unemployed, a person must meet the following criteria. They must be without a job, obviously. They must have actively looked for work in the past 4 weeks. They must be available to start a job if offered one. Now, considering criteria number 2 and 3, this is where we get the look. We take a look at the weekly unemployment claims, because those weekly unemployment claims typically contribute to the US unemployment rate at the end of the month once it's all calculated. Okay, so if a person does not meet all these criteria, they are not considered unemployed for the purpose of calculating the unemployment rate. So this is a very specific calculation in terms of what it is, right? So you basically need to be unemployed. You basically need to report to the government that you are unemployed and you are actively seeking for work. And if there's work available, you need to take that employment. All right. So very specific in terms of the unemployment rate calculation. Now, the other number that could be a huge factor in terms of inflation would be the average hourly earnings. This is the minimum wage, right? So do we see the wage increase? It's not, when we look at the job sector, it's not just, whether or not people are working and stuff like that, or any new NFP numbers that's increasing into the workforce and whatnot. But we also look at whether or not people are getting an increase in their salary, and that's basically the average hourly earnings. We see the decrease or increase in terms of their hourly earnings. Now, the US average hourly earnings data is a report released monthly by the BLS, alongside the unemployment rate as well as the NFP numbers. It measures the average amount of money earned by workers per hour in the US economy. The data is collected through surveys of businesses in various industries, and it includes both full-time and part-time employees as well as overtime earnings. The report is closely monitored by economists, investors, and traders, as it can provide insight into the state of the US economy and its potential impact on inflation. If wages keeps going up, there could be a higher chance that it could actually drive inflation up. And this is the reason why we want to include this going forward into the future, because in terms of what the central bank is going to be doing, they're going to be looking at wages, unemployment rate, as well as any new jobs added or lost. Okay. All right. So I think we can skip this here a little bit, but you guys, if you want to read through this, you can read through it. But tonight we're basically going to be looking at three data. The first one is the NFP numbers, and we need to compare it with the unemployment rate, and then we need to look at the US average hourly earnings if there's a huge change in terms of the wages in the United States. All right. Okay. A little bit of a breather, but yeah. We're going to be doing live, so we need to set up our trades very, very soon. But let's talk a little bit about what has happened in the past, because, I just want to give you a very honest picture into how we trade the NFP every month. So this is April, all right? You can see the release here. We've got the NFP release. The actual number is 236,000, consensus 228. Previous was 326. We have a drop from the previous number, but it is above the consensus, and it's still good. Okay, but if we take a look at the movement here on the Dow Japanese Yen, we typically see a movement to the upside, and then the market kind of pull back a little bit before it actually rallies up again on the Dow Japanese Yen. We can also take a look at this one here on the Pound USD. It breaks the range, and this is something that's very important because we want to look at the range on the breakout. We want to take that trade, right? So we see the market breaks to the downside because it was a data that was above consensus, and it was still above 200,000. Still a positive for the U.S. economy in the context that the FOMC is still looking at how the labor market is being tied or not to actually continue increasing inflation. So yeah, it adds into that perspective as well. Okay, so this one is very easy. It's not every month that we get something that's easy as this, right? It breaks one range and then it goes down. This is the initial trade that we want to take, and then after that, we want to consider whether or not there's actually going to be a fade that we can trade, where the market pull back to the range and then test that range, right? So there's two things that we want to take a look at tonight. All right, so we're going to be using sell stops and buy stops tonight, and once it's triggered, that's going to be your initial news release trade. But take a look at what happened after the NFP release. Most of the time it goes in one direction and it comes back again, so it created a little bit of a fade, tested the range, and it could continue to go down to the initial market reaction. Okay, right. This is the 7th of July, by the way. This is 7th of July. We have a breakout and the market never looked back. All right, so we could be looking at the market where it breaks and it comes back again, or whether or not it could just break and it just runs in one direction. Or the worst case scenario that we could actually have is actually last month when we trade this in early August, on 4th of August. The graphic on the left, the chart on the left there, if you take a look at this one here, there are two lines that's three lines, right? But if you take a look at the range that we kind of measure, it breaks both sides. It causes a lot of whipsaw. It takes out a sell order, it takes out the buy order, and then it rallies up, and then it pull backs down to fade, right? So this was a little bit of a unique case because out of the how many hundreds of NFP, I've been doing more than 200 NFPs, right, in my trading career. And this is one of those very unique situations where we have a revision that's actually below the consensus, and the actual result, even though it's below the consensus, it was still higher than the revision. It was pretty hectic, okay? But what I'm going to show you is this. There are cases, and I don't know what tonight is going to be, but there are going to be cases where it might take both sides of the order. And for tonight, we actually want to create a little bit of space. We don't want to really just place it at the range that we're going to be looking at. But yeah, you need to be a little bit more cautious in terms of where you're going to place your buy stop and sell stop. And hopefully tonight, we don't get both sides taken out, because it's going to create a lot of confusion after that if we get taken out on both sides. Okay? All right. Excuse me. This is the number that's going to be expected for tonight. The expectation is still going to be below 200,000. So we have the previous number at 187,000. Consensus is at 170,000 for the NFP numbers. The unemployment rate expected to remain stable at 3.5%. However, there are going to be several scenarios. Obviously, if we have a number that's actually below 170,000, there's a higher chance that the unemployment rate is also going to go up to 3.6%. Okay. Now, if the number comes in as per consensus, I don't think there's going to be a lot of changes. But if the number comes in below consensus, below 170,000, I think it would be bad for the US dollar. However, if the NFP number comes in above consensus, maybe even higher than the previous number, let's say 190, that's going to be a boost for the US dollar. Okay. So we look at the NFP first, and then we look at the unemployment rate, and then we look at the average hourly earnings. The average hourly earnings are expected to drop down in terms of growth from 0.4 to 0.3%. So we'll see what happens there. You can take a look at the yearly average hourly earnings. It's going to be flat at 4.4%. Okay, so those are going to be the numbers that we are looking at tonight. All right, so I'll try to explain this in the next 5 minutes, but pre-NFP trading, if you want to, you can trade before the NFP numbers, maybe get out during NFP. But we're going to be focusing on the straddle strategy that involves placing two pending orders, a buy stop and a sell stop, above and below the current market price just before the NFP release. This way you can potentially profit from a strong price movement in either direction. Once one of the orders is triggered, immediately cancel the other order to avoid being exposed to further market fluctuations. So we need to do this very quickly. And then once that's done, we'll come back to this slide and we'll do the fade. We'll try to fade the initial move. Okay. All right. So I need to go through very quickly, but yeah, let's take a look at this one here, and obviously going to be looking at Euro USD. This time around, I'm actually going to be using the hourly instead of the 50 minutes. But if you want to go in the 50 minutes, this is going to be the range, right? But yeah, let's set our buy stop. I'm going to create a buy stop above that range there. Okay, let's go. We'll adjust it. I'll just have the buy stop first, and then we'll adjust it accordingly. And the sell stop is actually going to be below the range that we see today. Okay, I'll push it a little bit lower, maybe about 10 pips lower, just in case, because I don't want it to whip both sides. All right, so we have a buy stop order pretty much at about 1.0861. And a sell stop order just about 1.0825 on the Euro USD. The Pound USD, very similar situation. I'm actually going to have this a little bit higher. We're looking at the upper end of the range here, so I'm actually going to have this a little bit higher, maybe higher than 1.27. I just want to give it a little bit more room. In terms of selling it, we'll create a sell stop just below the 1.2635. Okay. So you can take a look at it. This is on a 50-minute time frame. But yeah, I'm going to have a little bit more room this time around. I don't want it to be precisely at the high on the 50 minutes. I'm going to have it a little bit higher. In fact, I might have it a little bit higher, just about 1.2705. I'm not too worried about this because, range, a lot of things happen. I just want to give it a little bit more range instead of getting taken out both sides, right? The worst case scenario is price takes that order, and in the same candle, it takes out the other order. That's the worst case scenario that pretty much happened to us last month. So we want to avoid that as well. Okay, so on the Euro USD, the buy stop order is actually at 1.0861, sell stop at 1.0825. Buy stop for Pound USD is at 1.2705. Sell stop for Pound USD is at 1.2633. The dollar Japanese yen, if you want to, you can, but the range has gone down a lot. It has actually taken down a new low, so we might actually want to avoid trading the dollar Japanese yen. You can create a buy stop to the upside, but there's a problem with creating a sell stop for the dollar Japanese yen. I want this a little bit higher, maybe about 145.75. Right. For sell stop, we might be able to take a look at the hourly range. No, we don't have that because right now price is really pushing the US dollar lower. So we are not actually able to create a sell stop for the dollar Japanese yen. You can create a buy stop if you want to at 145.75, right? Gold, you need to go a little bit higher on gold. We want to go on the hourly time frame. And you can see how this is currently trading in a range bound market condition for gold, right? So you want to have this higher than what we have on the chart. Okay, so this is the current range for gold on the hourly time frame. You definitely want to have a buy stop about 1950, right? Maybe 1951, that's completely fine. Or you want to go 1950, that's okay as well. I would say about 1950 if you want to have your buy stop. And if you want to go for your sell stop, I want to have it a little bit lower, maybe at about 1935. Okay, I know there's going to be a lot of gold traders and we can't take a smaller range for gold. We wanted to kind of clearly break out of the range that we have. Now, the other thing I noticed, if I place the buy stop, the sell stop for gold here, you might actually want to have it a little bit lower than this one here because that could be a strong support area for gold. So you might actually want to have this a little bit lower, maybe about 1933, right? About there for gold. Okay. So yeah, this is for gold. You need to give it a little bit more range, and I'm gonna zoom. We got 3 more minutes. But yeah, you can take a look at dollar Swiss if you want to. And let me go blank, right? We can go dollar Swiss. If you want dollar Swiss, that's going to be a range at, give me a second. All right, we'll use the hourly for dollar Swiss. All right, we want to get a buy stop. It's a little bit higher, maybe about 88.50, right? A little bit higher. I want it to be a little bit higher, and a sell stop. About 88. Yeah, I would go with 88 for a sell stop. No, actually, yeah, about 88.05. Yeah, about 88.05. No, actually, you know what? I'll have it at 88. Just slightly below 88. So the range it's all right. It's about 50 pip of range on the dollar Swiss, right? You want to have a smaller range. You can do that on the 50-minute time frame. But really want to avoid what happened last month. But yeah, it doesn't mean much because on the 50-minute range, the difference is going to be about 10-20 pips. I don't think it's a huge difference. So we use the hourly time frame for dollar Swiss, and let's go with dollar Canadian. Dollar Canadian as well. I think we can use this range. I think it's going to be below 1.35 or 1.34. A little bit lower, 1.3480. Okay. All right, 1.3480 for dollar CAD. The upper side, you will probably want to have it a little bit higher, maybe about. It's too close. We want to have it a little bit higher, maybe about 1.3535. Something's approaching our buy stop. That was the dollar Canadian. But yeah, dollar Canadian, you want to have it about 1.3435. So these are the orders that we placed. Now, 1 more minute, right? Any position that's been open, let's say a buy stop has been triggered, you need to close the sell stop, right? So if the euro buy stop gets triggered, you want to close the sell stop. Okay. Right. Numbers gonna get released in a minute. But you should see an immediate impact onto the market anyway. Okay. Is it crashing on me? All right, let me close out. All right. Unemployment rate at 3.8%. Wow, that's huge. The NFP number was 157. That's a huge drop. And we got Euro USD triggered. We want to close out sell stop on the Euro USD. We got buy for gold triggered. We want to close the sell stop for gold. And everything else, we don't see that movement, which is really weird because this is a huge drop. Let's take a look at the number here. 187 to 157, consensus 170. Unemployment rate was a huge jump, 3.5 to 3.8%. So I think this should be bad for the US, but we'll see what happens. What's the initial market reaction? Why are we not breaking out of range? Okay. Is it crashing on me again? Okay. Look, I do apologize, guys. Sometimes this happens. But yeah. Buy stop should be triggered. I think this should be pretty much one-sided. Okay. All right. Okay. This is running. Trades are running. We've only got Euro USD and gold. I'm very surprised that we actually didn't get all the other trades triggered. All right. Sell stop for pound USD got triggered. I need to buy stop. I need to close my sell stop. We got 3 trades running right now. Pretty quiet, surprisingly. But yeah, it should be one-sided at this point in time. The dollar Japanese yen buy stop is unlikely going to get triggered because I think we are looking at a huge drop. So I'm going to cancel out on the dollar Japanese yen. We are looking at a free fall on the dollar Japanese yen right now. The dollar Swiss sell stop should be triggered soon. We just gave it a little bit more room, but get ready to close out the buy stop if you need to. All right, and we'll see what the initial market is for the first 50 minutes. Okay, market has stabilized. I think I shouldn't be crashing my MT4 again, but right now let's see what happens. We've got dollar Swiss, dollar Canadian, and it crashes on me again. All right. Okay. There's a request for Aussie USD. Maybe we'll take a look at Aussie USD as well, if I can get this up. But let's do it back up. For this one, let's go on to the Aussie USD. All right, we're back again. Okay, Aussie USD. Oops. Okay, so Aussie USD. Let's go to where we are right now for Aussie USD. Okay. Yeah, if you have a buy stop, it should be triggered, but yeah, I don't think there's any other reasons to look at. For the Aussie USD though, there are several key levels to watch out for. It's actually 65 cents that I'm actually a little bit worried for the Aussie USD. We've got a little bit of a resistance for Aussie USD at 65.25. Okay, let's go back to this. Why is my sell stop for gold still there? Let's close out. But yeah, everything else is still good. So we're going to be looking at a little bit of a whipsaw going on in the market. It's just always the case with the initial market reaction. I'm pretty sure for gold, I think we should be looking at a huge whipsaw. All right. No, not a huge whipsaw, but take a look at this one here. Went up 1950, pulled back down a little bit. So we're looking at a little bit of an extreme volatility going on, but it should be one-sided because the data, it's pretty bad in terms of the U.S. unemployment rate going up to 3.8%. I think with this in mind, market would probably be counting in for the FOMC not to hike in September because the employment sector it's kind of losing up a little bit. Okay, but yeah, we still have inflation on the 13th. Things could change, but for now, I think it could be a little bit one-sided. We'll see what the market is and see whether or not we can actually fade what the market is actually going to be doing. Let's take a look at the Euro USD. All right, still going strong. Really strong. So let's look for a little bit of a potential pullback, whether or not there's actually going to be a fade for the Euro USD. Okay, we are quickly approaching resistance for Euro USD, so you might actually want to set your take profit for Euro USD at 1.09. Pound USD, I think about 1.27 as well. I think we need to take a look at that. All right, so something happened here. Did I get taken out? No, I got buy stop. Sell stop. All right, dollar Swiss. I need to close out my buy stop. And let's adjust Euro USD. If you're trading tonight, you really want to get out at about 1.09 at this point in time. But yeah, we'll close out as soon as we can once we see that momentum has started to slow down. But right now, it should be a little bit more on the one-sided side. Trade for the US dollar. All right, it's look, the unemployment rate dropping down to increasing to 3.8% is actually not that great. Pound USD, still want to limit yourself to about 1.2745, right? You want to probably get out about 1.2740 at best. Right now, if you are in on some of this trade, if you want to adjust your stop loss to break even, you can do that if you want to. So, for example, the Euro USD. If you want to start moving your stop loss, you want if you can if you want to, but for now I'm actually gonna place it a little bit lower at 1.0831. And pound USD, you want to have it before the breakout happen, which is right around there. Okay. Dollar Japanese yen, we don't actually have a trade triggered on the dollar Japanese yen, but we'll see what happens. Okay. Now let's take a look at the yen crosses. I think this is being dragged down by the dollar Japanese yen. All right, let's take a look at gold. Okay, gold, it's actually very interesting. I don't really like where this is currently going. That resistance at 1950, it's pretty strong. All right. If you're thinking of holding on to long gold positions, just make sure you need to know where your stop losses is going to be. I'll probably have it a little bit lower, about 1933. So this is a pretty huge range for gold, right? In terms of where you want to take profit for gold, you can go a little bit higher on this one. That's completely fine. If you want to get out quick about 1955, you might be able to get out about 1955. Otherwise, we're going to be looking at about 1965, 1970 if you want to go out for gold. But yeah, look, I'm not too keen on the volatility in the market right now because it should be one-sided for the US dollar, but we're not looking at a huge movement in the market. We don't have a lot of volatility. I mean, like the dollar Canadian is not even triggered. A Euro USD, we got 1.09 as a resistance, so I need to, just remind you there are still resistances that are still in play for the Euro USD as well as the Pound USD. So they might not go to your liking because we can go onto the Pound USD. And if we take a look at the Pound USD here, we're still going to be limited at about 1.2725 and 1.2750 on the Pound USD. On the Euro USD, you're still going to be looking at about 1.09 as a potential resistance for the Euro USD. So the range is actually pretty small. For a number that's actually pretty surprising. The range is small. We're looking at about 50 pips of range, which is not huge, right? Typically with the NFP numbers, we see a much bigger range that's being established. Number has been revised. Let me check the calendar. Was there a revision down? Okay. Sorry, I missed that out. Previously, it was revised down to 157. The actual number was 187. Oh, okay. So there's a little bit of a revision. So let me bring this up because this is actually I read it wrong. I do apologize. I was doing it in such a hurry. I was reading things wrong. But this the actual number is 187. The consensus was 170. I was wrong. So I need to get off that trade. If we need to. The previous number was revised down to 157. The unemployment rate is what's causing that push lower on the dollar at this point in time. So this one here, before it's too late, get out of your positions right now. Right now you're at about break even. We are gonna get out. Okay, no point staying in that trade right now, and I see the reason why this is a little bit flat. And I would prefer to get out of my positions, no matter what it is. We're still good. We're still up by a little. But let me explain. And thanks for the chat there reminding me that there was a revision. Okay, so things have changed. Let me read the numbers again for you. I must have read it wrong. Okay. The actual number was 187. The consensus was 170,000. The previous was revised down from 185 to 157. So we're looking at a very similar scenario as last month where we have, no, actually very different. We have a number that's actually higher than consensus, 187. The previous month's number was revised down. So if we do the math, Let's do the math. And let's do it, right? So we basically have 187 minus 157. We get 30,000. We actually get an increase of 30,000 in the NFP number. So that's 30,000 jobs added to the non-farm sector. The concern on why it doesn't rally up for the US dollar is because I was focused on the unemployment rate. It was a huge surprise. Unemployment rate, if it goes up from 3.5% to 3.8%, that's actually bad for the US economy. But the NFP number is actually not too bad. However, in terms of the context on how we read this, you need to take into consideration what happened the previous month. It was revised down. This number, we got a number that's actually revised down again, and we have an actual NFP number that's actually above consensus. So this is a mixed data. Okay, and that's the reason why I want to get out of my trade on what we have just now. There's no point staying in that trade any longer because we don't have a good number right now. And it's very hard for now to actually fade the trade. So if you are thinking of going to fade the trade, you might be able to fade the trade right now. If we take a look at the Euro USD on the hourly time frame, I think the momentum still points to the downside. We are still looking at a potential rejection at the pivot at 1.0870. So if you want, right, for the Euro USD, if you want to go short, you can actually go short right now. And you can have your stop loss not too far, just about 25 pips, and that makes sense. You can target the lower end of the range at about 1.0829. This is okay. It's going to give you about 1-to-1 risk reward ratio. Now for the pound USD, I would wait a little bit because right now we're testing 1.27, right? So we're testing 1.27. We just want to make sure the hourly doesn't close above 1.27. If the hourly doesn't close above 1.27, then yeah, we might actually look for a potential short on pound USD. Okay, but if the hourly crosses above 1.27, then you need to be a little bit more careful with the pound USD because this one here is going to be a little bit choppy. The Euro USD, if you are thinking of going short on the Euro USD, you can wait for the next 2 minutes and let's see what happens. But yeah, if you are thinking of going short on the Euro USD to fade it, just make sure your stop losses is there at whatever high this 15 minutes candle is going to make. Okay, but right now we're gonna have it at about 1.0882. We'll adjust it later on. Okay, pound USD, I would wait. Now this makes it interesting because I would want to focus on the dollar Japanese yen. If the dollar Japanese yen tonight closes back up above 145, okay, I don't know if that's gonna happen in this hour. But if price goes back up above 145, that's going to be a strong bounce. That means there's going to be a lot of traders that actually picked up the dollar Japanese yen on this dip. So I'm not too sure on the dollar Japanese yen at this point in time whether or not we should go long. If you're thinking of going long on the dollar Japanese yen, it's a little bit too risky right now because we're still on the first 15 minutes candle post NFP release. So we'll wait. Okay. But yeah, gold is definitely not looking good. Be very careful because if gold doesn't close above 1940, 1950 on the hourly time frame, then do not go long gold. That's a huge risk involved here if it doesn't cross above that 1950 level. Okay? So I do apologize and thanks for the reminder on how that changes on the revision for the NFP numbers. But yeah, I've taken a look at the numbers and it's a mixed bag. That's all I can say, right? So again, the NFP number actually 187. The previous number was revised down to 157. Maybe if I were to show you, I think you might be able to see the revision in Forex Factory. But yeah, let me just bring that up. Okay, so if you're using Forex Factory, let me just bring this out. Okay, take a look at the, also we have the PMI numbers for the US at 10 p.m. So we're not done for today. Okay, let's take a look at this one here. The NFP numbers, take a look at that red dot, revised from 187,000. Okay, so last month's number was revised down from 187. It was red. So if we look at the revision, it was revised down. Projected consensus was 169, pretty much what, at 170. And the NFP number is actually 187. So that's an increase in terms of the NFP numbers. The unemployment rate was down. Is actually bad. It went up, right? 3.5 to 3.8%. So we want the NFP numbers to go up. And we'll look at the unemployment rate to go down for it to actually be good for the US number. If both of them goes up, that means it's a mixed number, because we don't really want to see the unemployment rate go up that high. Okay, so right now, in terms of the decision, in terms of whether or not the FOMC is going to look at these labor numbers as an indication on what they're going to be doing for their interest rate decision, this is a little bit of a mixed bag, but I'm really surprised with the unemployment rate number. It's a huge jump from 3.5 to 3.8%, but the NFP, that's likely going to impact the short-term momentum in the market, okay? Because not a lot of traders are going to be focused on this number, on the unemployment rate. Okay, so we good on that. With the mixed data, will the PMI be a huge impact into it? Right now, we anticipate PMI to still be below 50. But if the PMI surprises to the upside, and let's say it comes in above 50, then yeah, it would have the opposite impact. It would be good for the US dollar. Okay. All right. Any other requests for stuff that we need to take a look at for tonight? But yeah, right now, should we fade it? I would fade one. That would be on the Euro USD, because the risk is small. It's only about 23, 25 pips, so that's okay. But for the Pound USD, I would wait. All right, you really want to wait for the hourly time frame to actually see whether or not it closes above 1.27. If the hourly closes above 1.27, then yeah, we would look at further progress on the Pound USD if it closes above 1.27. So maybe I'll illustrate here a little bit easier. So let me just delete that. Okay. So if it closes above 1.27 on the other time frame, you would want to wait, right? And you could go long if you want to. And your target level is going to be at 1.2750. That's still going to give you about 1-to-1 risk to reward ratio. But I would say wait. There's no need for you to rush on the Pound USD at this point in time. Now we have opened the trades and I've closed the trades that we did during the NFP release. And the reason for that is because we have a mixed number. Okay, so the trades, it's pretty much closed out. Okay, simple as that. That's pretty much it. We got sell on the Swiss, we close that out. We got buy on the Canadian, we close that out. We got buy on gold, we close that out. We got a buy on Pound USD, we close that out. We got a buy on the Euro USD, we close that out. Right now, we got one trade running for a potential fade, and it probably wouldn't work out. It's probably going to hit that stop loss anyway. But yeah, I would wait for the hourly time frame to close. What's 10 more minutes post NFP numbers? It's not a huge deal. But we need to deal with the PMI numbers, because it's not very often that we get a PMI numbers, about 2 hours after the NFP numbers. Would that have an impact? I would say, yeah. Are we successful in fading the trade for the Euro USD? Probably not. I think this is probably going to hit the stop loss anyway. But yeah, I would wait for the Pound USD. I would look out for the dollar Japanese yen as well, if you're going to be looking at that. And for gold, if you want to be looking at gold, you make sure that the hourly closes above 1950. Otherwise, it's going to be a tough call for gold. Okay? Euro USD has bottomed this week. We are on track to close with a bullish week. Let's bring it out for the Euro USD. It's really hard to call for the Euro USD, because you need to consider this for the Euro USD. We're still within that range, right? We're looking at that range between 1.0850 and 1.09. Stuff that we talk about pretty much every week since July. So if we're still at 1.0850, 1.09, there's actually no clear direction in terms of where this is likely going to go. Okay, now if you go into the weekly time frame and you take a look at it and say, oh yeah, it's going to close bullish for the week, it would, but it's not in a great context because it didn't surpass 1.09. So let's see what happens. But if you're looking at on a weekly basis on where the Euro USD is going to go, you really want it to close above 1.09. Okay, and that's leading up to what my view is. If you have a long position, you really want to get out about 1.09, but you really want to be a little bit more cautious on the Euro USD at this point in time. Okay, can we buy the Euro USD? If you want to buy, the risk is there, and I would prefer to get out of my buy on the Euro USD because regardless, I think there's a little bit of a mixed number, and the downward revision last month still points to an additional 30,000 jobs for the NFP numbers this month. It's still a huge gain. Okay, regardless, it's still above the consensus, so need to be a little bit more cautious. All right, so yeah, so still surviving on the Euro USD, but yeah, if you're thinking that you want to fade this, I think we might actually be able to see a little bit of a fade on the Euro USD. This one might pull back down a little bit lower, but we'll see. Because right now, if it's really bad for the US dollar, you would see the Euro USD rally up, the Pound USD rally up, everything rallies up without doing a little bit of a pullback. So I think the revision came in a little bit later, right? It wasn't released. It wasn't the number. I didn't see that number during the news release until someone mentioned it, that there was a revision, and we checked the numbers again and it actually changed. There was that revision. So during release, probably a lot of people didn't realize there was that revision as well. So just keep that in mind. So yen just got strong this week. Any advice we can pick it up again? Maybe next week? Really depends what yen, right? Is it going to be dollar yen or is it going to be sterling yen? I think sterling yen was the one that's being dragged down a lot. But yeah, euro yen and sterling yen was down a lot. Dollar yen was still okay. It was pretty stable. And if we talk about the dollar Japanese yen, it's still alright. I'll be honest with you. I think it's still alright. Because technically, if we go on a technical basis in terms of what it is, we hit 147, which is resistance 1 on the weekly pivot. So that's pretty much done. If we noted the outlook, that target is pretty much done. Okay, how far back can this pull? How far down can this one go? Not a lot, right? Unless something happens drastically, you might be able to pick this back up about 144, 143.50 for the dollar Japanese yen. If it still closes above 145 today, I think there's a lot of people that's picking this up. So if you're accumulating yen crosses for a long-term position, I think it's still an okay and very sound strategy. But if you're doing it intraday, probably not the best. Okay, so just keep that in mind. All right. So we basically did a fade on the NFP numbers. We're going back on the strategy as well. So we had the straddle. We got in, we open positions, we get out, and then we want to fade. We did one on the Euro USD, the Pound USD, and everything else. You need to wait for the early time frame to close to get a little bit of a better view in terms of what the momentum is and stuff like that, what the sentiment is for the market, right? The other strategy that you can use is obviously the post NFP trading, right? So instead of trading it during the release, wait for the market to digest the NFP numbers and look for trading opportunities in the hours or days following the release. This strategy allows you to avoid the heightened volatility during release and focus on longer term trends that may emerge as a result of the NFP numbers. So if I don't trade during the NFP just now during the straddle, I would have more time to focus on the data that was being released. But thanks to Albert that we got that information so we can get out of our positions from the straddle. And now we're in that phase where we're thinking about what the NFP number could mean, right? We're trying to digest the numbers. So we have a much better information right now. We're not really rushing. But yeah, if you want to trade this post NFP, you might want to give it about an hour or two post NFP. since we got a PMI, you might actually want to wait until the PMI gets released, which is going to get released in 2 hours time. Okay, but yeah, that's going to be that strategy as well. Regardless of the strategy you choose, you need to keep the following tips in mind. You need to manage your risk, always use appropriate stop loss orders, and never risk more than a small percentage of your trading capital on a single trade. Stay informed. Keep track of economic news. We still got the PMI numbers from the US, all right, in 2 hours time. You got forecast market sentiments leading up to the NFL release. We got all that. Be flexible, and that's basically what we just did today. We were flexible. We just adapted our strategy based on the actual NFP numbers and the market reaction to that. Okay, so I thought it was a little bit weird as well, right? Before I even realized it was that revision, because the number was bad. It should be pushing up the Euro USD and the Pound USD, but we're not looking at that strength there. Instead, some of the orders wasn't even triggered, so we're not actually looking at a lot of huge range that was triggered post NFP, and that's probably why I just want to get out of that trade instead of, you know, it could work in our favor, but it could also work against us. With the new information, we were flexible, we adapt, we change, we just close out our position because there's so much risk right now because we have that mixed number. Okay. All right, so we got that, no worries. This is the code Nonfarm 2023 that you can use as well. Don't forget that you can use this code. The code is still going to be valid until the end of the year anyway, because it says Nonfarm 2023 until we get to January 2024. Then it's probably going to be Nonfarm 2024. But for now, in 2023, this is still going to be the code. All right, questions so far? But I hope I make everything clear in terms of how we interpret the number. I think it's also a good experience because this is something that a lot of traders consider as well. What if the numbers are mixed? You know, we take a look at the momentum, see the changes and stuff like that. Okay, so yeah, let's go back on the Euro USD. So yeah, you can see the fade right now on the Euro USD, right? We're not looking at that gain right now on the Euro USD. It's kind of being pushed down. In 2 minutes, it's probably going to close below 1.0875. The Pound USD as well, we can see the rejection at 1.27 as well on the Pound USD. So there's no point staying in that trade, you know, going long on the pound as well, because if we take a look at the breakdown on the NFP numbers, the way I look at it as still a 30,000 gain on the NFP numbers, right? Because the previous number was revised down to 157. This is the only problem for me, which is the unemployment rate, but I don't think this is going to kick in until post-inflation numbers, okay? All right. What's next? The next schedule that we have on news trading is actually going to be on the 11th of September. 11th of September. I don't like that day, but it is what it is. 11th of September. We're going to talk about the theory and practice, the advantages and disadvantages of news trading, the most profitable news for trading, NFP is one of them, news trading and price action. We're going to be looking at the buy stop and sell stop that we just used today. We also want to talk about the buy limit and the sell limit strategy. Okay, that's pretty much it. Tonight we're going live on the US PMI now. This is our session. We're just going to end this. We only have about a minute left. But yeah, what's GBP USD? Thanks to Albert for looking at the revision. Otherwise, we're going to be in deep trouble if we stay in that trade. You know, but yeah. All major pair just on the psychological number at this point in time, yes, and most US pair have been rejected at those psychological levels, and that's the reason why we could fade some of this. But yeah, the Euro USD we just closed, the Pound USD we just closed below 1.27. So right now for the Pound USD, you got a few options. If you're thinking of going short Pound USD, you could. Right, but you need to have your stop loss really tight. You can't have a huge stop loss on the Pound USD, because if you want to trade the Pound USD, you really want to have a very tight stop loss. So I'm actually going to cancel out on this one. But if you think of going short, just make sure your stop losses are just above 1.2725, right? About 30 pips if you want to give it. You can go target 1.2650. That's still going to give you about 1 to 1.5 risk to reward ratio. Okay, you can fade this if you want. Just keep your stop loss tight. You want to have it at 1.2725 or at the previous hour's high at about 1.2712. That's also fine. You just have about 18-20 pips of stop loss. I think it's a worthy risk for a potential fade. Okay. All right, let's wrap it up for tonight. Good luck to the trades. Don't forget, we still have the US PMI numbers coming out in 2 hours' time. With that, there's no inflation number next week. Inflation is going to get released. The CPI number is going to get released on the 13th of September. And I believe the interest rate decision is going to come in about 18th or 19th of September, but I'll need to make sure on that. Okay, so the next schedule that we have would be, for news trading, would be on the 11th. And that will be on the theory side. So if you want to learn about that, jump in. So I can talk about the risk of news trading and how we actually look at news trading differently from fundamental trading. And also on the 13th, we're going to be doing a live CPI trade. Okay, with that, good luck with the trades. Have a great weekend, and I'll see you.